All right, welcome to the weekly prep video for the week of September 28th to October 3rd. In this video, we'll be taking a look at the action over the past week of the indexes, the liquid leaders, industry ETFs, and end the video with long and short setups like we do with every weekly prep video. So if you guys enjoy it, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you could sign up for the Market Pulse Discord using the link in the comment section. Starting things off with the indexes and the NASDAQ, finishing Friday up 0.4%. We did end the week down 0.56%, where we had a relatively ugly pullback. Really, it's not even an ugly pullback. We've just had such straight up action that any red day kind of felt scary in the market. We did have Tuesday, Wednesday, Thursday, all red days. Thursday gap down, got supported above the 20-day moving average after undercutting and reclaiming the support gap, closed right at the 10-day. On Friday, we had a little gap down, sell off back through that 10-day, through the support gap, didn't quite undercut the support gap, put in a higher low overall, and then rallied at the end of the day to close well, back over the 5-day moving average and nearly closing out the gap down zone from Thursday. S&P 500 a little bit stronger, up 0.57% on Friday. We had that undercut and reclaim of the 20-day EMA on Thursday. And on Friday, we reclaimed the 10-day moving average, the 5-day moving average, and closed over the gap down zone from Thursday. So really strong price action out of the S&P 500. IWO, these are the growth stocks of the Russell 2000. Similar shakeout of the 20-day moving average in the support gap yesterday on Thursday. Strong action today, following through after that shakeout, reclaiming the 10-day moving average, closed just below the 5-day, just below the resistance gap high, but finishing up 0.97%, and for the week, down 1%. Next, we have ARKK. Similar action, tested the 20-day moving average, held the support gap zone, a little bit more volatility than the others today, but did reclaim the 10-day, reclaim the 5-day moving average, reduced a lot of the resistance gap zone, but not all of it. Finishing today up 1.8%, down 2.2% for the week. And then IBIT as a way to track Bitcoin. This still is showing relative weakness. It does look like this was a lower high, where I was hoping that would be just consolidation, then we could kind of push higher. But lower high, tested the 20-day EMA on Wednesday, failed, sold off on pretty big volume on Thursday. And then on Friday, just no response while the rest of the market was bouncing back. So Bitcoin and kind of crypto names, a little bit weaker than the indexes. Next, we'll go to the liquid leaders, and we'll sort this by price percent change from Friday. Actually, no, let's do price percent change for the current week. NBIS, really strong action, had this monster move up 49% on September 9th, did a secondary offering, and that offering got soaked up with closes over the 5-day moving average that entire time. Just really nice consolidation over the HVC, the high volume close. And then we had the push out on September 19th, rallied up into new all-time highs. And then while the market pulled back Tuesday, Wednesday, Thursday, this was making new highs on Wednesday, pulled back a little bit on Thursday, and then on Friday, undercut the lows of the last 3 days, rallied back and reclaimed the 5-day moving average, ending the week up 8.5%, and Friday only down 0.2%. KTOS, this is a new addition to the leaders list, up 6.8% for the week. Really strong action. We had a gap down on Thursday. Didn't quite get to the 10-day moving average, right around that price, but then rallied back up to reclaim the 5-day moving average. Then a little unfilled gap up and strong price action on Friday, up 2.4%, 2.5% to close at a new all-time high. Next, we have Alibaba. Awesome action this week. Had that big gap up on Wednesday. It was up 8.2%. From there, just slight pullback into the 5-day moving average, down 2% on Friday. Still finished the week up 5.6%. And the China theme is still one that I am laser focused on. LEU, a little bit of volatility here. At one point, it was up about 6% intraday. Came back into the 5-day moving average, bounced there, closed the day down 2.2%, but still up 3.7% on the week. We are seeing volatility pick up a little bit, so hopefully that can kind of subdue and we can get back into cleaner uptrend. Tesla, phenomenal action on Friday, up 4%. We had this gap down on Thursday, lost the 5-day moving average, and was showing some relative weakness while the rest of the market kind of bounced back. And we had a lot stronger closes, a lot stronger daily closing ranges out of other growth names, out of the indexes. So it was the first time that Tesla showed any relative weakness. But really, like when you have one day of relative weakness in this a phase, a span of relative strength, that's usually a good spot to like put on more risk on that name. I unfortunately did not. I still am just sitting with my position in TSLL, but phenomenal action on Friday. Reclaimed the 5-day moving average, closed almost over this resistance gap on an uptick in volume, finishing the week up 3.4%. APP now is the strongest stock in the market in my eyes, along with NBIS, up another 4.7%. Big gap up, open near the low of the day, close right at the high of the day. Just awesome, awesome action, up 3.1% for the week. On Thursday's gap down, got supported at the 10-day moving average. Like you can't ask for better price action out of a stock. Google, we had the undercut and reclaim of the support gap low, basically to the penny on Thursday's gap down. So good sign that we have evidence that buyers stepped in there. We had a little gap up today, but really no like push. We closed lower in the range after uppercutting and failing at the 5-day and the 10-day moving average, but on very low volume. So kind of an indecision candle out of Google, up 0.3% on the day and then down 3.2% for the week. CLS, another indecision candle on lower volume, did bounce at the 20-day moving average, closed down 0.35% on the day, down 3.6 on the week. And I don't love the price action this past week. I love the action on Thursday. That gap down, open on the low, closed on the high, on a big uptick in volume. But kind of coming into that day, we had a lot of chop, and then we finally pushed into new all-time highs on the 23rd. Followed that with an immediate unfilled gap down and a loss of the 5 in the 10-day moving averages. So still a lot of volatility here, not the greatest price action. So if we lose the 20-day, this is a name that I'll probably kick off the list. And finally, BE, this was the stock, kind of like APP, where it was just going vertical, like in expansions, we were rising over the 5-day moving average. Any pullback getting supported at the 10-day moving average. Finally got a little extended here, and we had two pretty sharp down days from $86 down to 66. Bounced and closed well on Wednesday, and then had another gap down on Thursday. Undercut and reclaim the support gap at 63. Nice action on Friday with higher highs and higher lows. The low of the day bouncing at the support gap low and the 20-day EMA right around that 66 or $67 area. Now it has the task of getting through the 5 and the 10-day moving averages and closing out this resistance gap. The sooner it can close out a gap down, and this goes for all stocks, not just BE, but the sooner you close out a gap down zone, the better. You don't want to have those lingering on your charts. The overhead supply is not an ideal. Next, we get into the industry ETFs. Because this is the weekly prep video, I'll go through each one of them. I've got 25. On the ones that I don't spend too much time on, I just don't take into consideration those like too much into my process. So we'll just go price percent change from the current week. First off, XLE, we saw a bunch of rotation, kind of away from tech in the like the high risk on type names into oil and gas and other energy related names. XLE, I love what it did on Monday, where we had a gap down into the 50-day moving average. We undercut the low of that support gap and the 50-day moving average. And then the next day we gap up, which creates what's called an island gap, where you gap down and then you gap up the next day. Great price action on Tuesday, back through the 20, the 5, and the 10-day moving average. Another gap up on Wednesday, strong action Thursday, gap up and strong action on Friday. Really starting to see money pour into oil and gas names. So that's a theme to focus on in the next couple weeks. Up 3.9% on the week. Gold miners, can't stop them. Just monster price action here. Similar to like APP, rising over the 5-day EMA. Any pullback gets supported at the 10-day. And now the pullback this week got supported at the 5-day. So we're definitely in that acceleration portion of the trend. But the last couple days of an accelerated move are the most fun to play. So I don't have a position in any gold miners, but I have one in PAAS, silver stock. So good to see like gold miners acting well. And we'll just go to the XME, the metal and mining, new closing highs on Friday, really strong price action, just basically straight up off the lows of April. Can't really find a better trending theme in the market than metal and mining. Next, we have Biotech's XBI up 2.2% on Friday, up 2.5% on the week. Awesome price action, and that makes me happy because I have a position in LABU that I bought on August 12th, breaking through the 10 and the 20-day EMA. And this has been just a really easy trade to hold. Expands on big volume, chops on lower volume, letting the moving averages catch up. Expands on big volume, chops on lower volume, expands on big volume. Exactly the pattern that you want to see. Kind of just a stress-free trade. Knock on wood that that continues, but really good action this week. Next, we have semiconductors. Really good action as well, up 0.25% on Friday. Throughout the market pullback, where the S&P 500 was testing the 20-day moving average, this only pulled into the 10-day, and it held the 5-day moving average on a closing basis every single day. Does not get stronger than that, ending the week up 1.9%. ITA, the aerospace and defense ETF, another theme that kind of led off the lows in April, and one that continues to get supported at the 10-day moving average on a closing basis. Not quite an island gap, but we had 2 days of kind of sell-offs, Wednesday and Thursday, to that 10-day moving average. Then a big gap up, reclaiming the 5-day moving average, and then did kind of close middle of the range on Friday, but can't ask for too much there. Up 1.1% this week. TAN, solar ETF, good undercut and reclaim of the support gap on Thursday. And then Friday just chopped sideways, still closed over the 5 and the 10-day moving average. Did have a slight gap down, but solar stocks are really starting to show their strength individually. SEDG, RUN, First Solar, FSLR. The only thing that's kind of holding this back is ENPH, and even that is starting to work on a low. It's not quite there. It's not the stock that I would like really focus on in the theme. But when that gets into a trend of higher highs and higher lows, the rest of the solar stocks are going to trade a lot smoother. Definitely not a theme to avoid. IYT, transportation ETF, little bounce of the 20-day moving average, close over the 5 and the 10. DEJ, entertainment and leisure ETF, gap up, close over the 5 and the 10-day moving average. Nice action there. Down 0.23% on the week. IYZ, telecommunications ETF, gap down under the 20-day EMA into the support gap on Thursday. Strong close on Thursday, followed through on Friday, closed right at the 5 and the 10, down 0.5% this week. XLY, consumer discretionary ETF, ugly close under the 20-day EMA on Thursday, followed by an unfilled gap up and a reclaim of the 20, the 10, and the 5-day. That's how you reignite uptrends. You get ugly closes followed by unfilled gap ups. If you go through plenty of charts, you'll see that pattern over and over again. XLF, the financial ETF, I was a little bit worried about this on Thursday because we closed under the 20-day moving average. We did close mid-range, so it wasn't like a super ugly close, but we have a resistance gap overhead. We had a lot of these like upper wicks, so stalling action at highs. And this, we're not out of the woods yet, but it's nice to see kind of a close under the 20-day, followed by a gap up, a reclaim of the 20, the 5, and the 10-day moving average. But as you can see, we did rally into that resistance gap and kind of sold off towards the end of the day. So getting through that as soon as possible would be better. NLR, the nuclear and uranium themes kind of combined. Big gap down on Thursday, like OKLO, LEU. LEU was the main one that gapped down and then immediately got bought back up, followed through to the upside as well. Down 0.8% on the week, still closed at the 5-day moving average, and it still has the right volume pattern. Big expansion bars on big volume. Had some profit taking on Wednesday for sure, but on pretty low volume. And then this on Thursday, the gap down. This is just an accumulation bar, and then an indecision candle on Friday. Pretty good price action overall. XRT, ugly close under the 20-day moving average. This is the retail ETF. We did reclaim the 20-day. Not a ton of volume. Want to get over this resistance gap before I'm like more confident in retail stock. XLV, the healthcare ETF, really ugly action on Thursday. Gap down, lost the 5-day, lost the 50-day, came into the support gap on big volume, and we did hold a sliver of that gap, but obviously not ideal action on Thursday. On Friday, we did get some positive action. Gap up, held the unfilled gap zone, and then closed back over the 50-day moving average. This is still in a stage one base though, so expect a lot of volatility. Shouldn't really be the theme that you're like super focused on, in my opinion. There's probably better things out there to trade, but obviously I don't want healthcare just like rolling over and retesting the lows. Cybersecurity stocks down 1.4% this week. Made new highs and then stalled right there. Came under the 5, the 10, bounced at the 20-day moving average and support gap. Followed through on Friday. CrowdStrike, good action. Zscaler, good action. Closed right at the 5 and the 10-day moving averages. KWEB, this is the Chinese internet ETF. Going to the weekly chart here, you can see we've just broken out of a 3.5-year base. Some stalling action after the 2 weeks of pushing out. Completely fine. If we pull back into that 39 area, that breakout retest, that's a spot where I'm going to be very aggressive trying to size up some Chinese names because when you break out of a 3.5-year base, chances are you're not going to fail. Like after that, and we're seeing the right volume profile here. Big expansion bars up, lower kind of pullback, lower volume on the pullback here. So I would be fine with this chopping under the 20-day EMA. If it comes into 39, that's going to be a little bit more aggressive. I would be a little surprised to see it do that, but coming into 40, that's the spot where I'm like more so looking to add Chinese equity exposure. Robotics ETF just coming down the 20-day moving average and stalling a little bit there. Some relative weakness this week, down 1.7%. ITB Home Builders ETF, another theme that I was getting pretty worried about, and I'm still not out of the woods. A close under the 50-day moving average, but the 50-day is still rising. The 200-day is in a decline. Whenever you have the 200-day in a decline, you have to expect a lot of volatility. Not usually something that you want to buy on strength, but on weakness. And we did get an unfilled gap up on Friday, but couldn't close over the 5 and the 50-day moving average and bounced on pretty light volume. So overall, not sold that this sell-off is done. But let's see if we can get over the 50-day moving average next week. XLP, pretty concerning action here. This looks like a beginning of a stage 4 decline. You have your stage 2 uptrend, your stage 3 top, and now we're losing the moving averages, 200 days in a decline, and some big weakness on Thursday, closing at the low of the day. Barely green on Friday, up 0.25%. Not ideal action. IGV, the software ETF, came into the 20-day moving average on Thursday, bounced and followed through on Friday, back through the 10-day. Didn't close over the resistance gap over the 5-day, but still up almost 1%, 0.9% on Friday, down 1.9% this week. Not the worst thing in the world. First test of the 20-day moving average after making new highs is usually a good risk reward spot. FDN, this is the internet ETF, lost the 20-day moving average yesterday, reclaimed it barely on Friday, and still stalling at this resistance gap. Not the strongest theme in the market, down 2% this week. XLB, this is the materials ETF, another one that's showing some relative weakness. I like that we had an unfilled gap up today after an ugly close yesterday, but we still have a resistance gap and we still didn't even reclaim the 5-day moving average. So some weakness there as well. Block, this is kind of data center and crypto related. Undercut the 20-day moving average, closed above it, but kind of feels like it needs a little bit more before it's ready to go. And MSOS, this is the cannabis ETF. I really thought that this was going to take off after we had kind of an ugly squat on September 23rd, then really strong price action on the 24th. I was ready to add to my position for the breakout here, and we just didn't get that. So I got stopped out of my position on Thursday when we took out the lows of this like 3-day low period here. We followed through to the downside on lower volume today, losing the 50-day moving average, still potentially a higher low here. And again, the 200-day is just getting flat now, so you do have to expect a lot of volatility. It's not something that you want to buy on strength, but on a shakeout or a weakness. And now we've had that weakness. We had a big move up from $2 up to $6, pulling back into $4, so a 33% pullback into the 50-day moving average. Still a theme that I want to track because it's not going to be correlated with the rest of the market. So some exposure into that as it either has an unfilled gap up on Monday versus today's low, or if we can shake out the lows of the pullback and then reclaim that area, something to watch for. Before we get into the long and short setups, I do want to go over some exposure levels. The NAAIM, active investors exposure, over 95%. That's kind of my threshold, my line in the sand where things start to get a little bit more difficult when you're trading on the long side, because if everyone's already long, who else is left to buy? And we're not there. Like the market is right at highs. We had a little bit of a pullback this week, but exposure did tick up 1.5% from 84.7 to 86.2. At this reading, it's kind of just like a non-signal to me. It's below 95. It's elevated, but not overbought at this point. Next, we can go through the commitment of traders data. This one is the NASDAQ first. We did start to see investors and speculators get a little bit more long the NASDAQ, but just barely. Oh, and sorry, NAAIM, it's as of Wednesday's close where they show their positioning for the commitment of traders data. That's as of Tuesday's close. So it does not take into consideration Wednesday, Thursday, or Friday's price action. But with that said, by Tuesday's close, we saw a slight tick up in positioning for the NASDAQ. Still not at that overbought levels that we had in August, where we had a bunch of chop until we kind of came off that positioning, and then growth stocks in tech names started to work really well. But they're long, they're not super long at this point. Next, we have the S&P 500. That also got a little bit more long. So I'm just looking at the red line here. And whatever the opposite of the red line is the positioning of the speculators. So with the S&P 500 mini or S&P 500 E-minis, as this comes back more neutral, that means that their positioning, speculators are still short the S&P 500, but they're getting a little bit more neutral with their positioning. So NASDAQ, they're long. S&P 500, they're short. Both of those positionings are getting a little bit more long. And then the Russell 2000, we saw a big unwind in the positioning. They were very short, the Russell 2000, the smaller cap names, more rate sensitive names. And you can see this past week, we got much more towards that neutral positioning. They're still short it, but it's not overwhelming short position where you get those like massive squeezes in the market. All right, getting into the long setups first. We'll do this by most liquidity to least liquidity, just using the average dollar volume for the past 20 days. First, we have Robinhood. This is a name that I really haven't focused on in the last couple of weeks, even though it made new highs on Wednesday. I just don't have a position in it, and XLF has been a little shaky, so I was a little bit worried about that. Gap down on Thursday and some more weakness on Friday, finishing the day down 0.7%. With this, I'm not looking for an undercut of this support gap zone because we've already been there. So people are probably putting their stops below that area. I would want to see another pullback day, maybe 2 days, into the gap zone at 118.60. Undercut and reclaim of that would be buyable versus either the 20-day EMA or the high volume close from when they were included in the S&P 500 right at 117. ALAB, not awesome price action if you've been in the stock and it was trading super well. We had one, two, three, four, five gap downs in a row. But zooming out, this is just a breakout retest, and you have a support gap zone, and you have semiconductors right at highs. So if semiconductors like the SMH industry ETF is going to continue to hold that relative strength, this is just about the best risk reward spot that you can have for it. Friday, a little bit of weakness down 1.4%, but on extremely light volume, basically an indecision candle. Two different ways to play this. If we have weakness in the market, an undercut and reclaim the support gap low is my preferred way to buy it. And if that happens, I would size it up pretty aggressively. Or through today's high, Friday's high, that's buyable. Stop would be a percent or so below the support gap. Next, we have NIO. This is a Chinese EV maker. Awesome moves from $3 up to $7, about 100% move there. Consolidating, letting the 10-day moving average catch up. Because I still think KWEB, the Chinese internet ETF, has a little bit more room to pull back. I'll be watching for an undercut of the lows of this pullback that should align with the 20-day moving average shortly, right around that 678 area. You could buy through today's high. That's fine. Maybe another day tightening up, and then I would more prefer that buying on strength. But I've got alerts set on both sides. The undercut and reclaim, that's my more of my strategy, more of what I would be comfortable sizing up a little bit heavier. Next, we have First Solar. We talked about the solar ETF earlier. This is, in my mind, kind of the leader in the group. NXT is one that we'll cover a little bit later. That's an IPO stock that's acting well. Great action on Thursday, undercutting the 10-day moving average, reclaiming the 10 and the 5-day and the support gap, closing at a new 52-week high. Let's see, right around a new 52-week high, at least a new high for the year. Indecision candle on Friday. Now just looking for a pullback, a higher low pullback into the support gap, into the 10-day moving average, right at that 215.70 area. And then because we're talking about solars, let me just jump to NXT. Almost got my buy on this today. We came down through the 5-day, through the 10-day, almost got to the support gap, didn't quite get there. That's the spot that I'll be watching for on another pullback for that group. Next, we have GRAB, GRAB. Really just a beautiful base here. We had a pretty big shakeout from $5 to 330 or so, then rallied up, higher low, higher low, higher low, that 200-day moving average. And then take a look at the volume that came in on this breakout from $5 up to 660. Rough math, what would that be? 30% move. Huge volume with that move. Now just pulling back to the 10-day moving average. Really light volume on today's inside candle. This is one where I would be comfortable taking on strength, either a gap up opening range break, stop at $6, or taking out today's high and then stop at $6 on that. EITF, kind of similar to Grab. Big volume on this breakout from $1.30 up to $3.60. More of a speculative name, so if you have limits on what you trade, just don't trade this. It does trade 225 or $227 million a day, so it's plenty liquid. It's just a lower price stock. Nice pullback from 350 down to 250. Pretty orderly pullback, and then very light volume on Friday with another red candle close. An oops reversal where we gap down and reclaim the low on Friday would be viable, or just a break through Friday's high, stop at Friday's low. LAC, huge volume, the highest volume ever on Wednesday, up 95%. Followed through on Thursday, up another 22%. Then we had profit taking on Friday, but on much, much lighter volume than the two expansion bars. Just looking for a pullback into the HVC, into that support gap zone right around 606. I'll just be watching for like a pullback and then a reclaim of the daily VWAP as the entry. Stop would be below the HVC. INOD, nice action here. Again, look at the volume on the price expansion. This lost the 200-day moving average, and I took it off my list. And then when it got back through the 50, it was already too late to buy, but I'm obviously impressed with the action. 36 to 76, so over 100% move there. Pulling in to the 10-day moving average. Great response to that gap zone. Now just looking for a higher low test, undercut and reclaim of the support gap of the 10-day moving average, right around $67 as the entry. Top would be the low of the pullback on Thursday. PGY, software name that I missed the breakout, and it's fine. If you missed the breakout, you can always do the pullback, breakout retest. And that's exactly what we're getting. A little bit heavier volume on the pullback than I would like, but the market was extended. Some speculative names were extended. This is the first test of the 50-day moving average since we broke out on May 7th earnings. So you have the first test of the 50-day, usually great risk reward. That's lining up with a previous breakout zone. And you have very small volume on Friday. Just looking for a break through Friday's high as the entry. Stop would be Thursday's low on this. We covered NXT, AAOI, big base here. So kind of a VCP pattern setting up. We have the big base, another higher low, rallied up into the resistance gap. And because the 200-day is in decline, it's not something that I want to buy in strength. It's something that I want to buy after a pullback. And we've had that pullback now. Maybe Thursday was the correct buy point on the undercut and reclaim of the 50-day moving average and $25. Friday, very tight candle on low volume. You're seeing a pattern with a lot of these setups. If we come back into $25, that would be buyable for me. And then I would use like a 2 or 3% stop on that, or through Friday's high, then stop right around $25 on that one. And finally, we have AEHR. Almost bought this on Friday. Came off the highs from 34-ish dollars into the support gap. Was looking for an undercut and reclaim of the support gap low and the 20-day moving average before I bought it. Didn't quite get that, so we'll just keep alerts at that area. Watch for that. If it doesn't happen, it doesn't happen. There'll be more trades. But that's the zone that I'm watching for, AEHR. And finally, let's get to the short setups. Average dollar volume. First, we have Palantir, and this is like one of the more liquid stocks that I'm watching for weakness. Potentially, this is a lower high. We already made the big move after earnings on big volume, and then this got sold off like really aggressively from 180, 190, all the way down to 140, which like it's good that we bounced there, we consolidated and we rallied up, but this is already a pretty big move into that rally. I'm wondering if the market does go into more of a correction, more of a pullback, if this is not just a lower high. So it's not like the highest conviction short that I have, but it's one of the more liquid names, one of the previous leaders that I'm watching to see, do we break to the upside? Do we break to the downside? The nice thing about like these setups is you don't have to take every single setup. I'm not going to, but for all these setups, I do have alerts at these key areas so I can get the market feedback to say, hey, Nick, I was wrong about Palantir being a short. It's breaking to the upside. That's good news for the market. We're more risk on. We can continue to trade on alongside. Or, hey, Palantir is breaking down. It was a previous leader. It's putting in a lower high. Now we're losing the 10-day. There's some more market feedback that this pullback is not over yet. So just watching the 10-day moving average on this one, breaking under that, and today's low would be the short entry. Stop would be the high of the day. Meta, this similar. Let me just back up. Rallied up to the resistance gap here at previous highs, could not close over it, lost the HVC, the high volume close from earnings, lost the 5 and the 10-day moving averages on that September 22nd day, followed through after a little gap up through the 5, the 10, the 20-day on the 23rd. Low volume consolidation candle under the 20-day moving average, gap down on Thursday, and then more weakness on Friday. We did get to the bottom of the support gap, didn't undercut the low, but got basically there and rallied back up. So it's not something that I want to short on weakness here, especially with the market being still relatively strong above the 10-day moving average. Like, we're in a bull market, it's a strong market. Don't need to short things already breaking down. So just looking for a rally back through the key moving averages, uppercut and fail of the gap zone at 760 as a potential short. And for a stop, I'd use just 2%. Next, we have OPEN, and this is a name that easily could be on the long setup as well. Just really tight action on Friday. Look at how small the volume was. Just very, very tight. Closed over the 5-day moving average. We do have 3 gap downs off the highs here, which is the only reason why I'm like even considering this as a short through today's low. But if this goes through today's high, I might take it on the long side because we're still in a momentum market. We've had a 3-day pullback that got supported on Thursday. We had some follow through on Friday. This is a name that it went from 52 cents to $10. Those are the types of stocks that can make just enormous moves. So through today's high, I would look to buy. Through today's low, you could look to short. Keep your risk nice and tight because we had that tight candle today. GEV, why is this not rallying with the rest of the energy names? It already made a big move from 250 up to 670. So maybe it's just consolidating and that would be fine. But we're seeing relative weakness out of this name. Gap down on Thursday, inside candle on Friday. You could take it through today's low as a short. Personally, that's not what I'm looking for. Again, just because the market is still strong. I want to see a rally back through the key moving averages, uppercut and fail at the HVC from earnings, at the gap zone high, right at 628 or 629. And then for my stop, I'd use just like 650 here. Just kind of weird that this hasn't been participating as all of the energy stocks are really taking off. RKLB, very similar to the open door setup. I think this could be a long if it breaks through today's high. I think you have a test of the 50-day moving average, a higher low test of the 50-day moving average, another higher low test of the 50-day moving average. Very similar to what like RGTI did, where if we go before the breakout, we had test of the 50-day moving average, higher test of the 50-day moving average, higher test of the 50-day moving average, and tight candle. And then we got that expansion, like big expansion, 100% move. I think that could happen for Rocket Lab. It would not surprise me because a third test of the 50-day moving average, really tight volume. From that contraction comes expansion in one direction or the other. The reason why I have it on my short list is how it handled the action at previous highs. We made new highs on September 12th, pushed it a little bit on September 15th, and then we immediately gapped down on big volume when we had a secondary offering. We got nice and tight, we rallied back up, but then we uppercut and failed the resistance gap almost to the penny. So sellers are still at that area. There's evidence that the sellers are there. And the last thing that you want to do after you come into a key spot, whether it be a resistance gap, previous high, key moving average, round number, the last thing that you want to do is have an unfilled gap down. And that's exactly what we had on Wednesday. We had another one on Thursday and relative weakness on Friday. So through Friday's low would be the short. The stop would be at the 20-day moving average. Through Friday's high, you could trade along with the stop at Friday's low, and I think it could work on the upside. ARM, probably the weakest semiconductor name that I'm familiar with. 200-day moving average just going flat, no power in this name. Resistance gap from the earnings gap down, rallied back up to that area, failed, gap down on the 18th, another gap down on the 19th, rallied into that area, sellers still there, gap down on Thursday, weakness on Friday, while semiconductor ETF is at right at new highs over the 5-day moving average. So just a lot of weakness here. I think semis will have like another push higher. So again, don't want to short into weakness, like right at the 200-day moving average. I want to short on a pop. So uppercut and fail of the gap zone of the 50-day moving average, right around like 144.50 is the entry. Stop, I would want to keep it over the previous resistance gap at like 147.50. QUBT, one of the weaker of the quantum names, this did an offering that it looked like it was getting soaked up today. Huge relative strength in the morning today where we rallied. I want to say it was up like 12%. But if we just go into like a 1 minute chart on this, it was to the penny. Let it load. To the penny, uppercut and fail of the resistance gap after the most recent highs. Like immediately responded to that level on big volume and sold off. And one thing that I've noticed, well, this is like we take a look at the other quantum names. RGTI looks phenomenal, probably can still go higher. IONQ, I do have a short position in this. Still doesn't look bad. Probably does go higher and stop me out. But QUBT not participating in the same way. And this type of candle where we rally up, we sucker in a bunch of people that are like, all right, QUBT is going to the moon, and then it sells all the way off. This traps more people at those higher prices, creating more selling pressure on the way down. Very similar to what HIMS did on August 5th, where we had a little gap down, big rally. It was up like 15% or so off the lows. And then it closed all the way back at the lows, trapping people at those higher prices. And then this dropped another 25% before it found support at the 200-day moving average. So I think that candle is very similar. The psychology behind that is very similar. And it's the weakest of the bunch in a group that is extended in the short term. Can it go higher? Absolutely. But I would be looking for a little gap up and then a lot like a green to red move as a potential short or a move through today's low, the 10-day moving average. And then stop, I would do like over $21. Then the last two are the two stocks that I keep watching for potential shorts. NEGG, just looking for a breakthrough today's low. This already made its big move from $3 up to 130, fell all the way down to 30, bounced to the 50-day moving average, had a big distribution day on the 22nd, down 20%, and now we've just gone sideways from there. Through today's low, Friday's low is the entry, stop would be Friday's high. ZEPP, another high-flying name, but it's only trades $17 million a day. The difference between the bid ask is like 1.5% at points. So like position wise, you have to really size it down if you're going to trade it. But we do have now three gap down zones. We lost the 20-day moving average on a closing basis for the first time on a pickup in volume on Friday. So just looking for a gap down opening range break to press the short. Stop would be today's high. So that's going to be the weekly prep video for the week of September 28th to October 3rd. If you guys enjoyed the video, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. Have a great weekend, and I'll see you guys in Monday's video.